you will always be broke. And he's more broke today than he was 5 years ago. You know, he blames all kinds of stuff. He's like, dude, look at the way the world. I said, me and you, we're related. So how come I'm not struggling financially and how come you are? Because he's smart. He's my own. We have the same DNA. And the reason is because it's not because I'm smarter or better or deserve more. It's because I learned a long time ago that you have to think like a general. So if you want to become like this buoy that will always stay on top, you have to become a master general. And here's what a general does. Just think of any war, okay, in history. Revolutionary War, Vietnam War, Franco-Prussian War in the 1800s, you name it, Napoleon's wars. Why did Napoleon win so much? And the answer is, before he started, he had a plan. And it wasn't just a plan like I see a lot of people in business. It's not like, my plan is to make an app and make a lot of money. Okay, that's one little sentence. That might be a good start, but that's not a plan. I don't know if you've ever seen these movies, but they're pretty accurate. When you see generals at the White House or whatever, they have like a whole board drawn out. They have like little pieces, and they're like, when this goes here, they have backup plans. They have they've thought through multiple steps like a chess game. In World War I, Germany almost won. Germany, in terms of generals, had some of the greatest generals always. Now, Germany, World War II, Hitler was obviously crazy. So actually Hitler, the reason Germany lost.
So let's go ahead and move on through the week. So this is Monday. We're going to try to sprint through this so everyone can see. So we have several trading rules, and those trading rules help keep us safe as we're moving through the week. Because the two things you want to know as a trader is whether or not you're keeping your overall stash, your trading capital safe, right? It's one of the things that triggers us into what Dr. Brett Steenbarger talks about all the time, into this fight or flight mode. We're afraid we're going to lose all our money. And so how do you solve that problem? Well, you have a simple trading rule. 2 stops back to back. In my case, a maximum of 8 ES points lost in a day, and I am done for the day. I come back the next day and start over. So let's go through the process. And so I can tell you ahead of time, the biggest failure rate is when I have a straight trend day up or a trend day down. As a matter of fact, trend days down close at the low so rarely. It's really true trend days up that cause me to hit that 2 stops back to back rule. And luckily for us, we don't get a whole lot of true trend day ups. But on Monday we did. First of all, we had a couple of ways of knowing it was a trend day up. We gapped, right? We had no attempt at half gap, and there was really no counter rotations. That being said, I follow my trading rules. I don't trade the first half hour to avoid getting run over, and usually that keeps me safe. Occasionally I stretch that out to the first hour. In this case, this is where my signal generated. This is my entry number 1, right? Right behind that is my entry number 2. And you can see I was actually able to stay in the trade all the way until I rented a lot of time, all the way till just past 10 a.m. But I did eventually get stopped on the move to a new high. My stop is generally 1 point above the swing high. Stopped out, first stop of the day. I think I took 3.25 points on this. I was once again tagged into a short right about here. Let's see where I know where I triggered in. I triggered in once again right here. We broke. You can see we when we don't signal a new swing long, each time we create a new structure and a trap back in, that creates a new entry point for me. So if you'll see right here on this block, we break to a new high. It creates a new entry point, right? Everyone can see that right about here. And you can see I probably jumped the gun a bit, but we closed just inside this structure right here at 20.94 3/4. You can see that turned around and right afternoon stopped me out again. So that's stop 1. Stop 2. This was a very late entry. It would have been a valid entry, except I'd already been stopped 2 times back to back. And that did it for the day. Monday kind of sucked. No one likes to get stopped back to back. But again, my total stoppage there was 6.5 points. My account was in good shape. I was able to roll to the next day. Let's go and take a look at, that was the 10th, I believe. And so let's go look at the 11th. 11th, things got a lot better. the advantage of leaving your day where you do not take a significant hit to start to end the day, right? It's manageable. It's within reach of the next day. If you look, we came in the next day, and again, we get a swing short generated, right? And if you'll see, this is entry 1, this is entry 2. We actually got a push up to entry 3, but it had already been tested. But importantly, you'll see how this 5-minute bar closed above the prior swing high. Then we closed back in. That generated an entry point number 4. We took this short right here at 20.80. I want to say we took it at 20.85 and 3/4. It might have been 20.85 and 1/4 where I got filled. It was a couple days ago, so I forget now. Push down, push back up. We immediately get our first 1, 2, 3 point scales, right? And the goal is to be out of half by either 0.3 or 0.4. And so we've minimized risk. And then we just start pushing the trade. And you can see we push all the way from where we entered. Let's call it 20.85 and 1/4, all the way down to 20.76. And eventually all the way to 20.73. I was out when I was up 8 points on this trade. I was completely flat at this point. I'd scaled everything out. But the trade did push all the way down. As it was pushing down, it generated a new swing long, right? So you can see here, this is entry 1 and entry 2. Again, the focus is on entry 3 and 4 in the room. Nothing wrong with taking 1 and 2. I'll often take them with options to compensate for the amount of stop that's required in the trade and let it work for me. But the focus is on entry, as you can tell, 3 and 4. We get our entry 4 right here, right? And you can say, well, Simon, geez, you either took 3 at the open gap, which we did. And so you got to remember, we're combining in the room multiple disciplines. This area is completely unauctioned. We know that we're likely to fill the gap. We took this long at 20.7450 in the room. And obviously we were able to get a swing and a trap into number 4. We swing from 20.7450 all the way up to 20.7850. We're able to get the first half of the trade off. We have a trap number 4 when we close back up into this range. I did leave a little bit on this trade to try to get the hook back up, which is what I was looking for, back to the upside. Instead, it came back out. It stopped me on my trailer. And once you have that 4 points, you either want to bring your stop to break even or net break even. We come back down, but then you'll notice again, we never generate a new swing low. That means each time we generate structure, right, we can get a new trap. So the structure is now, at this point of the day, the structure is over here. Close back up into this range would generate a new swing long. We generate that swing long right here. This is a new entry number 4. Stop is 1 point below the swing low. And we had 2 entries for this, and I put it on the private Twitter stream. It's on one of the earlier videos from the week. But you could have either entered here at 20.74 and 3/4. It was a big stretch down. Or you could have used the 50.60, which is what you're looking at here, the swing from this swing low to swing high, and that would have gotten you an entry at about 20.73. You can see the stop 1 point below the swing low kept you in the trade. Here's what's important. Even though we didn't get the hook over here, we were able to get all our risk off on this trade by scaling the first half of the trade over the first 4 points. We do the same thing again on the new entry, whether you took it at the actual proper entry or a 50.60 retrace. And you can see we get a hook in this particular case from the point it traps, which would have been 20.74, let's call it 20.75 and change, all the way up to, by the end of the day, 20.82, right? If you took the 50.60 retrace, your entry was 20.73, and you almost had 10 points on the upside. This swing long, this swing short did trigger near the end of the day, but as you can see, there was only 30 minutes, less than 30 minutes left in the day. I'm not a big fan of shorting the end of the day. It's hard to get a push down. When I do take it, I take a 1/4 size. In this particular case, we had a smoking good day, and I do not believe I took any shorts here. At the end of the day, I tried to push this over to the next day. I can't swear to that because occasionally I'll take a 1/4 size trade right at the end of the day, but I'm pretty sure I did not do that on Tuesday. Let's go to Wednesday. That was just fantastic. So that was 8.11. Let's go to 8.12. Excuse me, that was 8.11, 8.12. Yeah, there we go. Look at that. So 8.12, first of all, I didn't mean to do that. Let's see if I can put that back in place. So first of all, you'll see huge gap down, right? We closed prior night at 20.80. We opened at 20.66. Now, in the room, I'm always talking about not getting bearish in the hole. You'll see if you read my Twitter stream, you'll see that in Stock Twits, constantly hammering people, don't get bearish in the hole, don't get bearish in the hole. So if you'll look, we are, first of all, already opening up down 15 points. When we get down into this area, guys, we're down 30 points. Go do your homework. We almost never close down 30 points. We have a hard time closing down 20 points. You should be uber bullish. All I heard was Death Cross City on every Twitter stream I was looking at. It's ridiculous. You should be getting bullish when everyone's getting bearish most days if you're a day trader. So this is where we get our swing long, but we had a couple of things help us out here. First of all, we had open drive lower, right? And we were clearly looking for open for a trap in entry number 4, specifically because what I was concerned about was that we would run to the open gap down here at 20.41 1/4. So you can see here, even though this triggered, we never triggered into an entry number 4, right? We never even really got an entry number 3 through here. And you can also look, we sidestepped at the end of the first hour. Most open drives, the majority of the damage occurs in the first hour. And then you can see with this arrow, this is where we entered this trade, roughly 20.52 1/4. You can see there was another 50-60 retrace here after the signal was generated. And we completely annihilated this. We got 2 scales here. If you entered from the 50-60, you were able to get all 4 points right out of the gate. You almost took no heat. And as you can see, we had 2 50-60 retraces. We even had one more that took place right in here. You can see it came right back to the 50-60 retrace. And this entry was fantastic. This is the first 20-point trade I've had all year. It was really, really nice. We rode it to the long side. And we took now this was a day I pushed my luck a little bit too far. I took a short right here at 20, I want to say I took the short at 20.72 3/4 or 20.73. Right in here where this arrow is, we were able to get 4 points off of that short and move the stop to net break even. Obviously got tagged out as the market pushed up, but we were able to put 4 points in the bag. Very nice short trade. And then I pressed my luck one more time here at the end of the day. I really wish I hadn't. It was already in the last hour. I took a quarter-size trade. My stop was 1 point above the swing high, and I got stopped out here. But it's not a big deal, right? You'll notice as I'm pushing deeper in the day and the trades are getting harder and harder, I'm reducing my trade size. Early in the day, deeper in the hole, I'm getting more and more aggressive, right? And then I'm constantly adjusting my trade size for for the stop size that I have to have, right? Because remember, there's always 3 stops: the stop you want, the stop you can afford, and the stop the market demands. I always use the stop the market demands, and then I determine whether I can take the trade or not based on that stop. So that was a great day. Thursday, not so much. They really didn't want to give us any money on Thursday. I got an early long signal here on Thursday. Excuse me, that was Wednesday, Thursday, Friday. Oh, no, I take it back. Early long signal. I did get a trade on Thursday. I forgot about that. Early long signal. This is the 14th. Long signal that lingered from late Wednesday afternoon. Why do I have the feeling I had the wrong date here? I see why. So that's 14. I need the 13. That'll put me on Thursday. There we go. So we get a long signal here. Now this makes sense. Boy, it's hard to piece the week together when you've had a good week and you're trying to remember exactly everything, all the steps you took. We get a long signal, and I'm actually looking for a trap. I was hoping we'd close right below this 20.7450 on a 5-minute bar, then close back in. It never occurred. I chose not to take a entry 1 or 2, which were the highest risk trades in that sequence. As you can see, it pushed. But even in this situation, I know I've got to swing long, and I know to avoid taking any shorts in that area, and I avoided getting run over to the upside. It would have been nice if I could have gotten an entry 3 or 4 in here. I didn't. And I didn't have the confidence after the run-up from Wednesday that we wouldn't have a little bit deeper retrace, and we pushed to 20.88 1/4. But I was very grateful that I wasn't short anywhere in there. And then finally Friday, again, another very good day. Let's see if I can pull this up. Let's see, where am I at on the, let's see, 14th. There we go. I believe this is Friday. There we go. And so on Friday, we opened up again to we opened up and we had a continuation of a long side buy signal from late Thursday afternoon. I was not here to mark this down. We knew not to fade the open at all, despite the fact it was still within the first half hour. We waited patiently. We get the short signal fire. This is entry number 1. You can see right here we close above the top of this structure on this 5-minute bar. We close back in on the next bar. That triggers a short. We took the short. I want to say 2083 and a quarter or 2082 and 3/4 was the entry. And as you can see, we were able to garner 4 to 5 points on the downside push. The market eventually came back in. This is a balanced day. We pushed just outside of balance, back into balance, and pushed back up. That was it for the day. I did get a short very late in the day, and I took a quarter-size trade here. I assumed we would push back into the middle of structure since we were in balance. Obviously, there's a group of people that are short and are trying to cover and are very frustrated. The last thing that I want to leave everyone with this week recap is to look at the volume profile. And if you look at the volume profile for ES, we're just stuck in the middle of a very large trading range. The extreme ends right now, there's 21.26 at the high. Obviously this 21, this is the Greek low, right? And if you look at the majority of the, I don't know why that didn't print, but there we go. There's the high, there's the low. But if you look, we're really stuck at 2108 to about 2170. And really anything over 2100 right now, these are providing trap areas for the market, as you can see right here. Before the trap area was up here, right? You can see the trap area. The trap area has dropped down to this 2100, 2110, right? So we need to get up and above this 2100 to 2110 to retest this what's turned out to be a triple top. On the bottom side, right? You see this right here? Every time we push below that 2170, even though we got pretty deep in, it has snapped back up and closed back above 2070. So you know immediately, right? Below 2070, if we close, we have not been able to manage to get more than one close below 2070. So the first step is to get a close below 2070, really to kind of get your wheels cranking on, hey, maybe we can come back down and test that 2033 area or areas lower. And in order to get your, really cranking on the upside, we have to get above and close above this 2110 level. One more note on that. Generally speaking, a push up or push down, meaning a breakout of this range, will be accompanied by a gap up or gap down. Guys, this market's going back to old school style trading where the majority of the time ES does not break down. It just stays balanced in a range. That's exactly what we're experiencing. Don't get bearish. Don't get bullish. Get trading. Look for the market to push too far down, people to get too bearish and overextend the supply, and look to swing back up. Same thing on the pushes back up. When they push up and they outrun the supply, we'll push back into the middle. Take advantage of both edges and put money in your pocket. My name is Simon. I'm a Trade and Perform Coaching. Anyone who would like a 5-day free trial into the live market preview and trading room, along with our daily NQ and ES charts, please email me, and I'll be more than happy to extend you a 5-day trial. Hope everyone has a wonderful day and a great weekend. We'll see everyone on Monday.